Nvidia is going to give ChatGPT $10 billion. ChatGPT is going to then give that $10 billion to Oracle, and then Oracle is going to then buy the chips from Nvidia. It's all the same $10 billion. Doesn't even make sense. But they're like, but we promise $100 billion. Only if someone else's chips don't best Nvidia. And that could easily happen in today's world. 1 minute, you're Disney, you're on top of the world, and the next minute, your stock is where it was 10 years ago. It just happens. And that's why you have to be smart enough to let go of things quicker than most.
Just a quick pause before we get into this. Trading can be intense, and staying mindful during your session matters so much. That's why I created and am sharing a free 3-part audio experience that's helped me deeply. 1 for starting your day with calm intention, 1 to stay centered while you trade, and 1 to wind down with grace when it's time to stop. These tracks are yours. Just click the link in the description.
Hey, welcome back. Here at the Market Mamas podcast, I cover a wide range of topics from the intricacies of day trading to mindset mastery and psychological growth, with the goal of the conversations being next level growth for all of us. My name is Becky, and I'm a US-based futures day trader from the Pacific Northwest. My trading experience includes trading stocks, options, crypto, and futures, with both trading a personal account as well as with prop funding companies. Over time, I found that I most enjoy the fast-paced world of intraday futures trading, so that is my primary day trading focus now. Thank you for joining me on the Market Mamas podcast today.
Welcome back to the Market Moms podcast, you guys. I'm Becky, and I'm excited today because I have another guest with me who is an author as well as an expert in the financial markets and stoicism and bringing it all together for like the most successful outcomes in whatever we're pursuing. And so today, I'm very pleased to welcome WiLL Young with me, who is going to talk all about psychology and stoicism and trading and basically just merging it all together so that we can create our most successful outcomes. So thank you very much for being here with me, WiLL.
Of course, I'm excited.
So what started first for you? Trading, finance? Where did you begin your career work?
I really was just fascinated with the predictions of what people do. That's been my fascination. I would be 6 years old and I'd hear someone say, the weather's going to be this. And then sports people would tell you who's going to win the game and be wrong 80% of the time. And then I noticed they do that in sports and they're called experts. And then I started noticing they did that in finance and we're called experts. And I'm like, well, shouldn't an expert have a score like a quarterback? Should have a score. So should an expert. And then people often do anthropomorphizing things where they'll say Goldman Sachs said, I'm like, well, Goldman Sachs is an entity. You mean the analyst said it? Which analyst said it so that I can review their last 50 write-ups and know how accurate they are. So that's really what fascinated me, because once I started to see that, started to realize there's a lot of people that get paid very well for being wrong. And it's in football, politics, and sports, those 3 areas.
Yeah, it is so interesting that people can become experts and on something that is not concrete. And it's like information, knowledge sharing. It's such a vague opportunity, I guess.
It is. And that's why, for me, if I don't know what your track record is, your score, it does mean something, then I'm not going to listen to you. And I say this all the time to my father. He'll say, I read this on that. I said, who said it? I don't know. But they're on it. And so people get social proof, and it's a common heuristic just because they're on TV, but that doesn't mean they're accurate. And of course you can make a mistake, but if you're wrong 60% of the time, people should know, especially when they're trusting you, when you're going buy, or sell.
Yeah. And if you're making important decisions for your life, your business, your finances, it is important to have the most reliable data that you can, listen to the most realistic with a strong track record experts, and then make your own judgment and study it yourself. I think that's the most powerful avenue that I have found in my trading too, is to like do the work for myself so that I understand it. Because like I joined some groups that would give like buy signals, and I learned very quickly that that was not for me, because you're trusting somebody who you have no idea. And then you want to put your money on the line and you don't even understand what supports the trade and why. For me, that was more gambling than anything. And so I definitely would advocate traders to do their own work to create their system.
You can learn from everybody, even if someone doesn't teach you anything of value in terms of making money. They're teaching you how not to make money or to prevent losing money. There's so many things that you can pick up from people. And I made mistakes when I was very young in terms of the markets where I bought something and things just went up like 400%. It was in the early stages of solar. And I was like, wow, I'm smart, but really you're just dumb and lucky, which is how a lot of people lose everything. And then in 1 week, hedge funds blew up in 2008, and those things just went from 90 to $2 in 2 days. And that's what happens. Obviously that's a different time frame, but when you get older and you start to hopefully attain more money and real money, it's one thing to lose $2,000 on a tiny little account. It's another thing to have $2 million or $200,000 and lose 90%. Then you're going to be upset, but you should write it down. You should have a plan, and you should definitely look at the probabilities. The Bayesian probabilities are what I suggest everybody look at, because there's no gray area. It's math. If you do this, what are your outcomes? And figure out the system's best for you. Not every system is good. And I don't like options because so much of that's day trading in terms of gambling, because you have same day options expiration. That's crazy.
Yeah, that's a quick buy, and it's either going long or it's going short, and you're oftentimes all in. I mean, some people use a stop loss, but I read statistically almost more options, like something like 70% of options expire worthless. And so that means that options traders are predominantly not using stop losses when they use them. So it's like just throwing the dice.
Yeah. And they have the same day, which is, it's one thing if you buy something for 3 months or 2 months or a month or whatever, or a few weeks. But now to make money, companies turn them over constantly. I've heard there's a high percentage of people in Gambling Anonymous that are options traders now. It's dramatically increased because of those same day. Stocks are just, I think, the ideal way to do it, because you can learn about the company. You're not trying to figure out a move in a one-day move typically. And there's plenty of money to be made if you work yourself out and you get diversified. Diversification does matter. You don't have to own 100 stocks or 50 stocks. You could easily own 15, 12. Most I'll ever do for personally is maybe 17, but sometimes I'm heavily concentrated or in big positions, but I know what I'm doing and I have stops and everything. So I don't have to worry about that. And if I get stopped out, I don't look at anything and I come back the next day and don't worry about it.
Yeah.
That's hard to do because a lot of us are wired to try to get a win every day to feel good. But it just doesn't happen. And I think I went like 3 weeks without a win when the markets were going a little haywire. And it doesn't matter, but it wasn't much money. I just kept pulling it out. And I knew it would turn. It's just, you can't on the really, really short term make adjustments. And then you could go a month, 2 months with winning and you're like, this is going to end. So that's where you have to understand that the law of large numbers can be skewed by sample size bias in the belief in the law of small numbers, which is what a lot of people look at, small numbers, not the large numbers. And that's called the representative heuristic, where people start to match short-term moves with a long-term outlook. And that's not necessarily the case. There's a lot of things you really need to train for, but stop losses are critical to protect your capital.
Yeah, I think that's a great point that early traders can get stuck in the weeds with, of like, if you lose for 1 or 2 days in a row, you can get really anxious or fearful and doubt your system. And it may not have been your system or just a probability setup where you just don't win every day. And that doesn't mean that you need to strategy hop or be more afraid or leverage higher to earn it back. There's a lot of ways that you can fall into all kinds of traps if you get sucked into 1 or 2 losses in a row and get afraid and rebound emotionally instead of like holding steady.
Yeah. And with this administration, regardless whether you like or dislike them, he will put out tweets or whatever they're called in the middle of the day, and it will move the markets. That's not a normal precedent at any other time in history. And many of those was right after someone that was friends with him put in $100 million order in Bitcoin. And then he said, we're going to have a national Bitcoin reserve. So this is something that can shake people because it's not traditionally just the market and Goldman Sachs putting in something on, or you're getting an announcement from a country doing whatever or trade. But this is purposeful, where they're trying to drive the markets to help their friends. So that's another thing that can throw people off, that makes it very challenging. And I tend to keep more cash now than at any other time, because when it happens, I can then go in and buy something And it's very hard to just be careful to not be over leveraged. For me, if you have a trading system, you need to write everything down and write what your rules are and stick to your rules. And then at the end of a week, you can always update your rules, but don't do your planning on the weekends. That's what I always do. I don't really
Yeah.
change much anymore. I have a set kind of way I do it. I do everything based on events. That's kind of how when Meta had a big, and I believe they purposely did it. I think it was last March 2024, Zuckerberg says we're going to spend 50 billion more on the metaverse that no one uses. Stock drops 27% in one day. That was a buying opportunity. And I believe he purposely drove that down to buy more shares. But that to me is an event that happens during earnings. And then you could have one where when Russia invaded Ukraine, oil and gas stocks shot to the moon. I remember I sold them, but I remember banks were going, it could go to 200. I'm like, when they're telling you that, they're probably unloading them onto people. So you have to realize what is someone who you know nothing about, what is their agenda? And a lot of times they're just pushing their garbage onto you and telling you to buy. And that's where you can take a lot of big losses because you're hearing someone do something and the bankers are not known. There's an old book in the 1920s called Where Are All the Customers' Yachts? And it talks about the bankers having the yachts and the customers did not. So it says, where are all the customers' yachts? It's still the same today.
Yeah, absolutely. It's the same. It's even worse today, I would argue. Like, yeah, I think that's smart to like look for outside catalysts. And then instead of having an emotional reaction and chasing and entering a FOMO trade, instead kind of stepping back and being like, what could be the driving force behind this? What potential could happen after this giant move that's outsized for normal activity? And then is this giant buying move sustainable based on the fundamental change that just happened or the news change that just happened sometimes? Or is it, a fake out, and then you want to like not be emotional and chase it and see the opportunity that will come after the fake out slows? Like that's a very cool trading perspective and system.
The thing that I will share with everybody is I use a company called Sentiment Trader, and they look at a host of different items. They look at whether it's wheat, corn, whether it's coffee, whether it's the S&P 500. They don't really look at individual stocks. They look at indexes. And they use sentiment because sentiment is psychology. That to me is very helpful for clients because I'm able to look at something and say, if you bought here, the Bayesian probability is 82% of the time over 33 trades. That gives you good high probability to block it out and go back. And sometimes they'll tell you, 80% of the time it went down before going up. So these are the types of things you want to use. You want to use math because you're not going to get any magic. Very rarely will you get luck. So you need math over magic. And to me, I use the same with clients. I call it pay the discipline tax today to get the freedom dividend in the future. So I do the work today. So I pay myself those freedom dividends to do what I want. I love surfing and I spend a lot of time in the water surfing and I do a lot of time reading and I never watch financial news because they're on there to sell something. Though if I make it on one of the shows, I won't be selling something. I'll be probably arguing against what they pitch, which is buy this, buy that, do this. And the question I think that I've always said, and I know I got in trouble with one of the persons because I wrote for her, is they always go, well, we're going to buy this. I'm like, well, you've never told us to sell anything. So where did the cash come from? Thin air? Right?
Yeah.
They're always like, well, buy. Well, you didn't tell me to sell anything and you
Yeah.
keep telling me to reinvest the dividend. Where's the cash coming from? So it's a really incomplete picture. And a lot of the people that I've met don't have the best returns, but they call it articulate incompetence. They sound wonderful, but they're incompetent when you look at them. Like they go on TV and they say, oh, I can't believe Tom Brady did this or that. You're like, you do know you played football, right? And you were terrible. Or you have coaches that were very bad coaches who are then telling people who are great coaches what they're doing wrong. I'm like, hey, he's won 4 Super Bowls and you went 0-16 and you're telling him this is the types of things that you need to really look at. before you take advice.
It's like that saying of those that can't do teach, like if they were millionaire traders and they're living in their little perfect dream island, their happy life, like maybe they don't want to be on the news, like dealing with all that bullshit. And maybe they just are successful in their system. And so I think there's some argument to the fact that sometimes the loudest voices are not necessarily from the strongest structural support.
That is a good analysis. Tedlock in Super Forecasters talks, he calls them hedgehogs. They're real loud. They tell you one point, and when nothing works, they blame it on everybody but themselves. Where foxes, oh, okay, I looked at the data, I was wrong, and then they try to fix it. You want to go with people that admit mistakes, though when you look at laws of power, people don't like hearing people admit it. But to me, I think it's a strength, because when you make a mistake, you're saying, I keep improving. It's like you're running up the stairs, you slip and fall. You don't stop running upstairs again. You're running up it 5 minutes later, but you're just not running with wet socks or with socks on or whatever you're doing. You just start to be a little bit smarter about when you do it, or you don't try to carry 9 things up the stairs when you're running up the stairs. We've all done it. We've all slipped on the stairs, and that's the same with trading. You're going to slip. You're going to make mistakes, but you don't have to keep making them same mistakes. And that's where the psychology comes into play. And I highly recommend learning from Philip Tetlock, Daniel Kahneman, and Amos Tversky on Bayesian probabilities, because the only way you can walk through a minefield is if you constantly practice it. The moment you stop doing it all the time, you're not in shape. It's like you could have been a marathon runner 20 years ago, but you can't just run out and do it again. You have to continue to work at it. So it's a nonstop exercise. So I try to use those types of terms in it, that I'd rather keep working hard every day and improve, because I don't want to be in a situation where I have to, if I stop for a year, then I have to work my way back up again, because it just doesn't come back. It's work. This is a full-time job to be trading.
Yeah, I agree with that completely, because I think staying conscious and careful and watching and seeing, I drew these levels last night based on yesterday's movement, and today how they responded on these levels. Like, it's all data that you can take in and assimilate into your system and figure out, I've been doing XYZ and it really isn't working, but if I adjusted to this system over here, it works more consistently. You journal that data, you adjust, you try it again the next day, and you get more data every time. I think it makes you so much stronger. But like you said, it's that consistency of showing up for the work and paying attention all the time, because then that gives you the data that you need to know what's working and what's not. And if you made an adjustment, was it worth it, or do you need to adjust differently? And then it's like, I agree that trading has to be treated like a business that you are operating when you're executing trade, but also on the periphery of that, when you're fine-tuning your system and you're dealing with the data that you're getting each day, because that, I think, is the best recipe for success, is just the work of it.
The practice, taking notes, you got to write things down. It's important, because without writing them down, you can't put your thoughts to paper. If you can't put your thoughts down and you can't express it in detail, then you really don't know what you're doing. That is a common thing. It's called the illusion of information adequacy bias, meaning we often think we have enough information. But if I ask you, if you put bikes together for a living or something like that in Portland, you know how to put a bike together. And I can say, oh, you just put the handlebar. That's not how you do it. There's a lot to it. There's pedals. There's all these things that just blow people's minds away. They're like, oh, really? Yes, of course. I ran into a guy just the other day getting my car washed, and he was at the front of the marathon because he had to pace the person who was running top speed. And, it's a very fancy bike and all this stuff. And he's like, oh, this and that. I'm like, whoa, that's crazy. But that's how you have to be. Yeah. Because if you want to compete at the highest level, and this is the highest level, whether you're in it or not, you're competing against people who are very good at this. And if you want to compete and make money, you have to give everything you have to this. This is not something you can play around with. Granted, you can buy a stock that's low price, hold it for 5 years. The probability over time it'll go up, but it depends on your time frame and the risk. Like, one of the best things I often mention to people teaching is, if you were buying or trading Yahoo back in 2000, it was $400. If it went to 401 or $399, depending on long or short, you were making money. But the long-term shareholder, they were never going to get value out of that, because it was really a $20 stock priced at $400. So also understand what your goals are, because you can have long-term positions at the same time as trading. Sure, that's what I do. Right? I have plenty of long-term positions. Amazon is my favorite, along with Google, but I don't really hold any AI stuff now because I bought it all back in 2022. Like nobody wanted it then because it was inexpensive, but now everybody wants it. The deals aren't there. It's like trying to buy real estate in 2007. You weren't getting a good deal, but man, there was a lot of transactions. And that's where you have to look at the value side of it if you're doing that side.
Yeah. Smart. That's why I think speaks to your experience and the way that you help people with wealth building beyond just trading now, because you have expanded into bigger pictures and growth structures and how to do it long term as well as the short term, right?
My whole focus most of the time, especially as you acquire wealth, is you got to be very careful with taxes. If you make a ton of money and then you pay 30 or 40% of it back, you didn't make as much. So there's another layer to it when you're trading. And for me, when I handle other people, I will take losses, but you want to look 3, 6, 9, 12 months ahead, because it could be bad reports come out in April and then you had a loss. Take that loss then, because there's no guarantee you'll be able to take it in December, November, when most people do it. Most big banks, they all do it at the end of the year. And it might be something, but when United Healthcare had a bad loss at the beginning of this year, I sold it and I took a loss. You could buy it back. I'm not going to use that stock because there's just something inherently wrong with it. But if I liked it or I felt good about that area, I could have went in and bought it back. Like in 2022, I sold AMD at like 160. And I think I bought it back at like maybe 90. But again, it went much, much lower and then it went up, but it's not that much higher. I mean, Walmart did as well as that. So you oftentimes think because I bought this stock, I'm going to do well. But Walmart's done phenomenal since its low point in 2022. And that's the other thing, is don't be focused on just one sector. People have to eat food. People have to buy groceries. There are things people have to do, and you can't build anything without material. So you need, so I have a copper bar on my desk reminding people, you don't have electricity without copper. Physical things matter. You have to have physical. So keep those as ideas and stop always just looking at one thing, because a lot of the times what's in front of you, my best trade in the last 4 years has been Spotify, but I didn't know that. I watched all the stocks come down from COVID, and I kept a list of like 100 stocks in the S&P 500, and all that went down 50% or more. So to me, I just every week I did my report, and I would be like, okay, I'm going to buy Spotify. I'm going to buy Etsy. Etsy didn't do anything. Spotify and Shopify did well. Teladoc did not. So I had a list, and I put equal amounts in each. And then, of course, Spotify took off, and I thought it would because 1 billion people listen to it. And kids who have it, their parents are going to cut a $10 service. You know what I mean? But they might cut a $30 service for cable or Netflix, but they're not going to cut their kids' music because we love music. And when we're upset, music. Or Shopify, I figured they're not going to go out of business. They don't have any inventory. So little things like that. But also, I don't mind not holding and selling. Etsy, I thought would do phenomenal. And I love Etsy. I love buying stuff. This is where I got this from. But it didn't do well, and I just let it go. So that's why you have to be willing to sell things that even if you like the company, it doesn't mean it's going to do what you hope. Because I don't necessarily Walmart, but it's been a great stock.
Yeah. Well, I think the fundamental discussion around that is powerful because commodities, where there is a physical product underneath it that is required to operate human life and the countries that we live, like there's always going to be value there to some degree or another. So that's a reliable hold depending on where you got in at. Same thing with the companies that are widely used by the most of the population, such as Walmart. But then, things that are a little more abstract, there's a lot more risk with that. I mean, healthcare is really inconsistent because there's so much manipulation in that world. And like the whole world of crypto is, a little abnormal because the physical commodity behind that. And so there's a different view and approach to those different like things that you can trade.
Yeah. And this is when we got the Infrastructure Investment and Jobs Act, I decided to buy 3 companies. I knew John Deere was a company that was inexpensive, but I bought Caterpillar, John Deere, in United Rentals. You see United Rentals on the side of the road. If you're building something and you only need something 6 weeks, you don't need to buy it. So I bought those 3. John Deere didn't do well. The other 2 went up. Also, that little bit of diversification, because you can't just be, if I'd have put it all in John Deere, I wouldn't have done as well. Or if I'd have put it in John Deere and Caterpillar. But because I often do things in 3s, I did Walmart, Target, and Shopify. When you do that, you tend to at least break your losses or protect yourself. Not because I'm dumb, but because I'm not smart enough to always know what's going to work out. Target seemed like a great deal. It dropped 60%, had a huge dividend, but then the CEO was dumb. He made a lot of mistakes, and that's out of our control. Where, I wish I'd have bought Costco. I didn't buy Costco, but Shopify was fine. So
it's a great point about diversification, because you don't have control over everything, and you can have the best understanding of what it might do, and then something weird happens. And so if all your eggs aren't in that basket and the weird thing happens, you're still fine.
Correct. That's the goal is, I want to share is, it's okay to own 3 stocks. Buy them equally. If one goes up a lot and 2 go down, a lot of times you just break even and walk away. Yeah, okay. But if 2 go up and 1 goes down, you're going to be happy, and you're going to forget about the loser because you're winning. So that's my focus, is to be enough diversification to not own everything, which a lot of people do, and not buy an ETF, but to buy that area. The only subsector I've ever bought really was SOXX, because I didn't know who was going to come out with the best chips, and Nvidia did, and it takes off. But you can buy Nvidia too, but just in case you were wrong, you can buy that, because that is a subsector of the big sector. So that's the way you could focus on just those. So that you can do that. But if you bought like technology back in 2022, Apple was like 80% of the entire ETF. So just buy Apple. You know what I mean? You're like, really? I was like, yeah, really. That's because it was so big then. But now it's not big compared to some other companies. And that's where people make mistakes, is they're focused on Apple's business, but Apple missed AI. I mean, they have whiffed, and they missed on the cars. They could have, BYD is now selling more cars than Tesla, and we don't have access to that. So Apple could have probably really been in a great situation for that. And like General Motors and other places, they're disconnecting themselves from the Apple CarPlay. There's all these things constantly going that you don't realize. That's why sometimes there's a little bit of luck by buying a couple, because you don't really know, and someone could have a breakthrough and you just get lucky. But you were smart enough to not put everything in one, because it's so difficult.
I've heard you make some really really interesting and engaging analogies between surfing and trading. Do you think of those things similarly sometimes?
Yes, I do. Surfing, when you go out, the ocean is vast. It's strong. There's nothing you can do. When you're in the ocean on your surfboard, you get knocked around. It's just the way it is. Yes, I've had some great rides, but no different than trading. I sent out a picture. I was on like an 8-foot wave, but it took me hundreds of falls, lots of salt water down my throat. And I always joke, wealth is like seawater. The more you drink, the thirstier you get. You have to suck down a lot of salt water in trading and surfing to get better. And you can control the board you're on. You can put on a wetsuit. You have to do a lot of the work. I'm training for Hawaii right now. Now, I'm not training for crazy waves, but 8-10-foot waves are pretty big for the average person. And that's big for me. So I'm doing all this training. I'm doing these things so that I'm prepared. That's what you have to do when you're trading. They're very similar. The water temperature is out of your control. The market temperature, the recession, the economy, the global. An investment today with Nvidia getting into Nokia, that's just random stuff. Or Qualcomm saying we're going to have our own chips. Or this administration buying in. All these things are out of your control. And you could be in the water, and then all of a sudden you could have a southwest swell come in because the wind changes. There are so many things out of your control. You have to be present. You put your phone down. One, you never have your phone in the water. And sometimes people will be talking and they get smashed by a wave because they weren't paying attention. That's the same without having a stop loss in there. You get smashed, you lose, and you get pushed all the way to shore. And the big thing with surfing all the time is people get stuck. If you ever see the whitewash between the waves in it, people get stuck there because that's where they're trying to get out, but they're not good enough to duck dive or go under. And that's with trading, you get stuck in this area where you're not really learning because you're not writing down, where am I making my mistakes? What am I doing? And I don't control hundreds of trillions of dollars in the global markets, but I can control what I'm going to do, what I'm going to buy, what I'm going to short. All of these things I can control. And then the rest, I have to put the protections around. I have to know what board I'm going to ride, what stock I'm going to do. And seasonally, we know there are certain sectors that do better. And that mindset does help people because people naturally are going to go, oh, let's buy Apple or whatever, because it's that time of year. And knowing that type of stuff is helpful because that is the psychology behind people tend to see something. And then that social proof heuristic means all of their friends around them are telling, we should buy this, we should buy that. And then they start to go up together. And that is powerful, but you also have to know that you have to step away from that. And that's the same with the tides in the market. In the morning, you might have 2 or 3 good hours of surf, and then you have to wake the very next day. Whereas other places, the surf is really good in the evening. And that's the same with all the different things that we have. All of this is out of our control. Control yourself, control your mindset, control how you approach things. And when you have losses, when you get whipped around, you get knocked off your surfboard, that's just part of life. You don't get mad at the ocean. It doesn't do anything. You're a bad ocean. No, you just go, that stunk. And that's the same with the markets. And that level-headedness is really important because you cannot chase returns and you will compound your losses. Like if I've had to come in a few times because I was held under for quite a bit, and it is scary, I will admit. So I just came in and sat on the beach. I didn't feel bad. My pride wasn't hurt. It happens to everybody. You get hit hard, you get the wind knocked out of you, you get held under for 15 seconds. It feels like 20 hours. Like I'll never see my mom again. You know what I mean? And that's the same with when you lose. You want to just get back, but you don't. You want to be patient because losses compound very quickly, gains much harder.
Yeah. I love that analogy so much. Like I'm going to re-listen to this episode myself for like specifically that segment because it's such a beautiful image of the reality of being a trader. Like you should know if you're going out on a surfboard that you are putting yourself at risk of the waves and it could be very dangerous. And so be fully prepared, have yourself, in the suit that you need and at the ideal time, and everything that you can control, have it as well controlled as you can because you are entering a place where your control is lost every moment. And so it's so good to think about, there are ways that you can set yourself up for the best opportunities for success. And sometimes you're going to like kill it with the best wave. And sometimes you're going to end up on the beach coughing up salt water for days.
Yes. And like I have a couple different boards. And when the waves are light and easy, I ride a heavier board in terms of liters because it's easy. But when we get into certain periods where the volatility picks up, I often tell people, just get out of the water, stay out of the water, minimize your trading. For me, I didn't do that. I did that initially. Now I'm like, okay, I surfed my first tropical storm. Now that I don't recommend because it's crazy. Like the waves are pretty big, but that is the experience I'm at now in terms, I'm way further in terms of trading, but I even only had one stock during the little bit of the craziness. I just held Berkshire until I could feel like I could buy. And I knew it was crazy because I shorted Restoration Hardware. It was the best short I've ever had in my life. And I knew that people weren't spending because of the new administration. And I'll never forget my employee was driving me. And I just tell this because I've never heard this before in a conference call, and you can look it up. I'm like sitting there going, please lose 10. Please lose 10%. I was very sure it was going to go down. And it went down about 10%. And then Crazy goes, I'm going to put tariffs on China. And the second he did that, it went down 48%. And I'll never forget. I made a lot. I was like, pull the car over. I want to jump up and down on the side of the road because that's luck. That's pure luck. But the CEO goes, I'm not going to say it here. Just look up what he said. He said it on a conference call. Like he,
as you would,
he was cussing. Like he was
I can't
stunned.
blame him.
And I'll never forget that because the CFO taps him or something, says, "You need to look at the stock price." And you heard him say it, and he goes, and I'm like, okay, well, I'm done for the week. And that's where sometimes if you get a windfall like that, you just walk away and you say, I'm done.
Yeah.
Because, I got lucky. And I'm just telling that story because the volatility, and if I would have been greedy, I might have went long quick or something. That next couple of days, it was bouncing around because of that. That's where you could lose money, gain money. You just need to sometimes step away, take your wins. And if you have losses, stepping away is really important. Catch your breath is what I was trying to say. Cause I was excited. I'm like, oh, I could, but the old me would have tried to compound it into faster gains, but that doesn't turn it into more money. The older me says, oh, we had a great week. I'm going to not pay attention the rest of the week so I can have some peace of mind. And I think that's some of the best advice I've ever taken for myself. It's hard sometimes, but for me, I was like, this is great. I'm free. I'm taking Wednesday, Thursday, Friday off for myself. I'm going to buy a steak dinner and, that's it. Treat my friends. And that's what I did. And I never looked back, and it would have killed me if I'd have been in and out. But I never looked at the market. So I was fine.
Right. I think it's a good point to controlling your emotions, because even on the highs, I mean, the lows maybe arguably a little bit worse, but even the highs will make you have a different view of opportunities, and you will want to make more money faster, like when you have a big win. And I also have found, like, when I have a really big win, or especially in the morning, if I'm day trading and I get a fast, easy win where I'm like, one candle just doubled my daily goal, and I'm like, but then I almost like, I should trade more. Like, I have this whole day, and sure, I made a ton of money in like this short period of time, but like, I want more. And in those situations, it's like, whoa. Go work out, let it be, enjoy your day.
You should. When you have wins, you made money. That is one of the rarest things to do. And most of my trading, I basically just made a decision because I have a full-time job. I manage money for a living. I do all of my decisions in the first 30 minutes, and then I'm done. That's it, because that's kind of the Wild West every morning. And then if I feel good about the market and something went down, I might start to nibble on something at 3:00 because you tend to have those pivot points. A lot of the middle of the day, there are ways to make money, but you'll have stuff kind of settle. But most of the gains historically are overnight. So like yesterday, if you own something, you could have sold in the morning and been pretty happy with a lot of stuff. And because they tend to float up and then kind of come back. So figure out what works for you. Sometimes I'll sell half and I'll just let the rest ride because I'm not greedy. And what I've learned is when you don't lose, you compound very fast, or you minimize your losses. You compound so much faster. Well, you get a windfall. Like last Friday, I had a stock, NXT, which I forgot I owned. I knew I owned it for a little bit longer, but they had earnings and I totally forgot, and it went up like 10%. And I'm like, I just sold it. It could have went up 20, but it probably closed down up 8. But again, I just kind of got lucky. I thought it was the next week. And when you get something like that, you just take it. And if it was I lost on Netflix the week before, and that was like a 10%, 8% loss. And that's the other thing. This is really important. I was disappointed Netflix lost, and it happens. I lost 8%. But if I'd have held that, it would have probably went down 13 or 14% that day. So I sold that and just said, oh well. And then I just never looked at it. That's really good advice for most people because they're hoping it trails back up. But most of the time, if it has a bad morning, unless there's something and the market's dragging down too, it's going to probably just keep going down. So minimize your losses. It's so important to do that.
Yeah. I love what you said about if you just don't have big losses, then your money will compound a lot faster. It's very, very true. I have found too, like if you can just not have a blowout day, and even like I like the baseball analogy of like base hits and then every once in a while a home run, like that is a really profitable system.
I mean, I like to have a few longer term ones, but I don't take very risky stocks in general. I'm not going to buy too many crazy risky stocks. These are a couple I was playing with because in the solar area, for some reason, they've been going up, like First Solar. So that is a very stable stock versus some of the other ones. But these other ones are like doing energy transmissions and stuff. And everybody's chasing nuclear, but nuclear is overbought. I mean, it's going to take 5 or 6 years for these to get put together. And when a stock's up 900%, the gains aren't going to catch up. So for me, I'm looking at who's going to help save money in the cost going up. Are there ways? And there are companies that do that. So I'm not focused on what everybody else is doing. I'm focused on what is actually going to help us now. And then when they report earnings is going to be beneficial, because someone can come and say, we're going to build 50 plants. But that doesn't mean they're going to build 50 plants. They're talking about 500 billion in AI investment. And when I looked at the numbers, Nvidia is going to give ChatGPT $10 billion. ChatGPT is going to then give that $10 billion to Oracle. And then Oracle is going to then buy the chips from Nvidia. It's all the same $10 billion. Doesn't even make sense. I'm like, but they're like, but we promise 100 billion only if someone else's chips don't best Nvidia. And that could easily happen in today's world. 1 minute you're Disney, you're on top of the world. And the next minute, your stock is where it was 10 years ago.
Yeah.
It just happens. And that's why you have to be smart enough to let go of things quicker than most, but also smart enough to sometimes trim off a position. You can let it ride, but don't be overly greedy or you will pay a hefty price for that type of stuff.
Yeah, I agree with that too. Like I love the phrase peace with my peace. It drives a lot of my trading system of like, if I get a good chunk of a good move, like lock it in and move along. And it's that same philosophy.
Yes, that is one of the most critical things. Yeah, you can let the small pieces ride and maybe it keeps going up and you could always go back and say, yes, I had one client bought a lot of Nvidia like 10 years ago and it didn't really do anything. And then it just went to the moon and he really likes it. I'm like, you just literally made 10,000%. You have to get out of this. You've changed your entire life. Yes, it's crazy because it went up that much. Just like it was like a moonshot. And that's just luck. And when you get that opportunity, it's highly unlikely it can go. It's $4 trillion. And so we were able to get him to sell quite a bit of it. Now he has guaranteed money that will never go down in terms of that. And that's where you reduce the risk.
Any other tips you have for traders who are stabilizing in this game?
I would say plan out the end of the year, pay attention to taxes. You want to make sure you write down what your thoughts are. If A happens, B happens, and C happens, what are your plans? Let's say this week is earned. So for me, event driven is this week. I own a lot of Google. A lot for clients, for myself, like a lot. And I bought that. It's up a lot since we bought it earlier this year. And I don't know what's going to happen on earnings. So I don't even know if I'm going to pay attention, but there will be other earnings seasons like Amazon hasn't went up all year. It's been basically flat. Something like that. They have so many other factors. I tend to watch what happens with earnings that if it gives me an entry point for a lot of stocks, or it confirms what I'm doing. If Google comes out with some really good stuff, I mean, it's confirmation that we made a good decision. If Amazon blows it out, I will be thankful that it's finally catching up because it's very inexpensive. But oftentimes you could have something go wrong or one-off charge with like Boeing or something like that, or where you can get into something really inexpensively for the long term. I don't necessarily know what I would buy at this moment because my shopping list is kind of short right now, because we're kind of frothy at the moment. But if something really falls down and gets cheap or inexpensive, have a plan in place, or maybe it's next year. That's where you get some of the best deals is after earnings when, like Wells Fargo, they stole everybody. This is one of my best stock trades. They stole everybody's money. The stock goes from $60 to $20. But if they reinstated the dividend, it was a 10% dividend. So I bought it at 20. Now it's 85. That is an event that happened that none of us could have predicted. That's why you have cash. And as we get through the end of the year, there will probably be one or two stocks that are good stocks that will have something bad happen. Be prepared for that and take advantage and do your homework ahead of time. That's what I think the real value is, being able to take a position with the unknown unknowns. And that often pays off. And so that's what I'm really looking for right now. I have a lot of cash available. And I don't know what happens, but there will be some events that happen, whether it's, to be determined, but I'm waiting. And that gives me the excitement to pay attention to the earnings season.
Yeah. ready and paying attention. I think that's the key to being able to capitalize on opportunities, is not holding a bias, but just watching and recognizing when things might happen and then what you might do. And that preparedness, I think, is so smart, because then you really can get in at an ideal point instead of having to figure it out when the event is underway.
Yes. You'll know it's an event for that. Like Restoration Hardware, I was on the good side of it that day, and it's come back because it was an overcorrection. But again, I don't like to play that type of game. I deleted the ticker, I made my money and walked away. And I don't want to be in the furniture business anyway, because when they miss, it's horrific. And when they make it, it's fantastic. That's not my type of trade typically, but there's going to be some really good companies that come out over the next 3 to 6 months that you will be able to probably buy after bad earnings because of whatever case, because of the tariffs on, tariffs off, or whatever. There's so many events that are happening that are going to cause some serious things, because the full effect of the tariffs hasn't really hit a lot of the earnings yet for certain companies that import.
One last thing I want to get your take on, because I think I've heard you mention it before, is about the value of community. And I think that as a day trader, to try and doing it in isolation is really dangerous. But to find people that understand trading and understand the experience of trying to become a profitable trader, I think that having good people around you that speak that language and understand what you're going through is really valuable. Have you found that to be true?
Yeah, so I went through quite a few different communities. I read a lot, and I get stuff from Sentiment Trader, which I do recommend. It's very helpful for the indexes. They give you Bayesian math. They make it simple. But I joined a group. I went through about 10 different groups. The group I've been in since 2020. It's run by one major guy, and there's been a lot of people that have come and gone through it. I've stayed with it. He's helped me narrow down the stops, a tighter stop or a trailing stop on the things, and also helping just when I needed to sell something, it reaffirmed what I thought, and that was a good feeling. And sometimes I was like, oh, I'm going to keep it going. He's like, hey, look, you made a ton of money off this trade. You're up 50%. Just sell it. Just be done with it. And that type of help can be helpful, because I'm human too. And I'm thinking, oh man, I'll buy another surfboard. I bought one surfboard when I shorted FedEx because it made so much money in one day. But oftentimes like FedEx went down and then it kind of came back. So I had a stop on it. And so I kept all the gain. These are the things where community can be helpful, because they keep you humble and everybody's talking. And then you can also help people that are in different stages that are coming on, and you can oftentimes see your mistakes in them. And it helps keep you like, I have to keep running. If the moment I stop running, the moment I think I'm attained something, is the moment you really start to make a lot more mistakes. It's like in sports, you're like, I'm the best. And then someone beats you. You're like, all right, you cannot take that attitude. You are constantly running. It's called the Red Queen effect. I want to tell you this one last thing. Alice is running with the queen, and she's running and she's not going anywhere. And the queen says, in our world, you got to run twice as fast just to stay in place. This world is running fast. You have to keep running faster. That, to me, is a great metaphor for the visual of everybody's running hard here. And if you're not running harder, then you're not going to win.
Then you're going to miss things in your process. You're not hungry enough. You're not striving hard enough to stay on your game.
Yes, you're not hungry enough. That I always had that picture that them two running and not going anywhere. That's what a lot of people are. They're just running enough to stand still. They're not running enough to actually get ahead. And this is why so many people lose in this field.
Well, thank you very much for your time, Will. I really appreciate all of your wisdom and the information that you've gained over the experience and the way you brought it all together. Like it was a valuable conversation with you today. I really appreciate your time.
I've had a lot of fun. I love sharing this stuff because I don't want to see people lose money. And there's so many, hopefully I painted enough images where people can look at things, because we're in this together. I want people to win, but we're fighting against some of the biggest institutions, and it's very difficult. You can, but you got to block out their noise, because they have a goal to put their bad stuff on you. Remember that. That's what they'll say. We like this stock, and they're selling it. Goldman Sachs does this all the time. We love this stock. It's the best stock. And they're selling billions of it. Saying, here, would you like some of our shares? once you block that out and you really focus on yourself, you can actually really start to do okay, because no one will care about you as much as yourself. And if you pay yourself first, then you can help your family and everybody else next.
Yeah, that's a great message. There's so much manipulation. You got to try and stay ahead of it and see it with eyes wide open so you can protect yourself.
Yes.
Well, you have some links where people can find you. And so we'll put all those in the description below. That way, if people want to chat with you more, get more information about what you do and how you do it, they can find you anytime if you're up for that.
Yeah, no, great. I would love it. I love talking this stuff. And, obviously for what I do in my full time, I have to have the long-term discipline, but I always have a plan. Everybody knows our plan. I write it up. Everybody knows 3, 6, 9, 12 months. You have to plan ahead because things are going to go haywire. And when you're prepared, you can take advantage regardless of what happens. That is the number one rule for me, is to always be prepared. And that's served me so well the last probably 8 years since I really refined my business and really refined my trading. Is when something happens, I always have cash available because I've trimmed positions and I built cash for whatever happens. And that's how you make the best decisions, when you're not under stress. You never want to sell something when it's down 30% and this is down 30, because you might buy more of this and then this goes up or this goes up and you hold a loser. So if you have cash, you don't have what's called regret. And regret is a powerful thing in this game. We all have those.
Yeah, we've been there. Yeah, I've been there for sure. Yeah.
No one can say Wall Street hasn't stolen some money from their pocketbook.
Market tuition? I've definitely paid market tuition.
We've all paid market tuition.
Thank you so much for your time. And everyone, thank you for watching and being here at Market Mamas with awesome guests coming on the show more and more. So thank you so much, Will.
Thanks.